Hi, how you doing, guys? This is Ray from nextforextrade.com, here to teach, not preach Forex. And let's kick off today. Today is the Tuesday, the 20th of August 2019. So, same format as I done yesterday. What I'm going to do is just go over all the charts in the market, see what opportunities there might be, and then just look at the positions that I've got open currently as well to discuss those. So, let's just kick off with AUD. CAD, and we can see on a daily again nice bearishness. I've still got some lines in from yesterday. I was looking at this area of resistance, which is still hold true. There has been some bullishness to kind of come and attack that again. So overall I'd still be bearish on this. It's not great what we're seeing on the 4 hourly at the moment in terms of this bearish movement we're starting to see here. But we still do have a safety zone above this area here. So if you had entered a position on this, I would still maintain that. But I wouldn't be looking to open a new position right now. But it's really just a case of seeing whether this resistance holds, having a stop above that level as well. Going for the 1-to-1 is achievable. And yeah, so yeah, that's good enough on that. Let's have a look at the next one. So we've got the AUD Swissy, similar story, finding resistance here. It's lower high, kind of interacting on a daily on its on the average of our standard deviation channel there. So similar story, because it's a similar cross, that we've got this resistance. The price is just struggling to get through. That low jumps out at me here, that it's found support here on this extreme kind of extreme that the market moved to and fell down to and pushed away off. So it found support there, and you know, it's no coincidence that the price this is such a significant level. Let's just have a look at what they're saying on a weekly. Yeah, so on the daily, there's enough context on the daily, but this extreme that we saw here, look how it's once it came through that level, it busts through, and now it's having a lot of trouble getting back past it, because I mean, the way the price works is when it hits extreme here, it's kind of fear and greed in action in the market, because this is a memorable point here, which is why when it's come to test this level again, it's having trouble getting through it. Now, whether that resistance holds or not, who knows? But all we can observe from this is that the price is going to have some problems at this level. So if you were to short this, then looking for stops above this level is a reasonable, reasonable place to have it, because it's a clear indication of where we're wrong. Just going to bring that. Yeah, okay. So looking on the 4 hourly on this as well, that's the same. So on the daily, what I just done there was just capture a more recent move. So this was the initial move that we're looking, and it's finding resistance at the average, which is good, of our standard deviation channel. And putting it into this context here of this most recent move, we can see it's interacting with the upper edge of our standard deviation channel, which is this same portion that we're looking at here. Now, the fact that on our hourly as well, we're seeing a lot more contact points with that resistance. Same story, very troublesome getting through this. So you could, if you wanted, consider shorting with stops above this level. You'd have a nice, relatively large, if you're going for 1%, a relatively large position to short this with a stop above there. My only reservation about that is I prefer to see some signs on the lower time frames of that bearishness kind of showing its cards first of all. At the moment, across hourly, 15, 5, they're all very flat. So it's this sideways movement that we're seeing. What I would prefer to see is on, at least the 15 and the 5, it starts to show lower lows and lower highs. So to break this, for me, the key area of to break is really this kind of level here, because you can see there's lots of support, previous resistance as well. So for it to break through here and to start making lower lows and lower highs and start kind of cycling down would be a more a better type of entry for me than just shorting based on the price being here. But those are a couple of ways that you could play it. Either shorting now, stop above that level, or wait for it to break support here and start to show signs of bearishness with lower lows and lower highs. Next, AUDJPY. No, I wouldn't really be thinking this. It's a similar story, but the one before that was better. So the AUD Swissy was much better setup. So really, when looking for opportunities, just take the best one that's out there rather than humming and hawing on multiple currencies that move in a very similar way, so that you can avoid any chance of currency correlation when you enter the trade. So that's a no for me. AUDUSD, I'm going to come back to that because that's the position I'm in currently. CAD Swissy. Similar to the other AUD crosses that we looked at, this reversal here that we saw off of this type of level does just grab my attention. It's not ideal. What I'm looking at is this. I'm deeming this as a lower high, the way that it's not interacted perfectly with our standard deviation channel, but it's kind of a softish type level. Just going to see what that says on the lower time frames. Hourly. No, I'd leave that. I'd want that level that we saw, that what we're deeming as a lower high, to have had more significance on lower time frames. I mean, it's okay. It's very similar setup to the last one, but the problem is entering this here, our stop loss isn't going to be as tight. It's going to have to be above this level here. So it means you've got to have a smaller position size, and even on a 1-to-1, it's got to move further. If we go back to the other one that I was looking at, what was it? AUDJPY. No, it wasn't. There's the one before that. AUD Swissy, was it? Yeah, the stops on these are going to be much tighter. Can't find it now. Hang on, where was it? Yeah, it was AUD Swissy I was talking about, wasn't it? So there's shorting from here. We're going to have an entry around here, or just as it breaks the lows, and it means that you've got a bigger position size for each pip that it moves. So that's better than having it all the way, entry all the way down here with a stop all the way above here. So I would leave this one personally. Same pattern we're seeing. I mean, obviously a lot of these pairs move very similarly. Same story with this. Lower time frames are a little harder to read. It's tradable, but I would pass on it. Overall very bearish on this. I think I've mentioned this before. The way these kind of phases are very rangy on the daily means that, yeah, overall I'm bearish on this, but it's probably going to take a longer time to make its kind of extension. So given each of these bars being a day, and how rangy it is, and this is the 4 hourly, you know, it's just one of those pairs that I wouldn't really want to be in for a long time. So especially with the swap as well. What's the swap on this? CUD CHFJPY. Swap's not too bad, minus 0.4 on the short, but don't fancy it. Next. No, next. I'd be bullish on this, but yeah, it's very choppy. No, next. Euro Swissy. I think I talked about this on a fade trade yesterday. Yeah, this is, I mean, if you were going counter trend on this, that still holds true. Stop below this level that we're seeing on the, let me just take off this Fibonacci. But a stop loss below these levels here, looking for the retrace in this move here. We've seen some nice signs of bullishness start to happen on the 4 hourly and the other time frames as well. So we've got context. This isn't great in that the way this is moved in the hourly, because it's in capturing this move on the hourly. We can see that it's interacting with the upper edge of our standard deviation channel. So if you weren't in this already, a more conservative approach would be to wait for it to break this previous lower high, break this level here, and to pull back using a standard deviation like this. So it breaking this previous lower high from this move would mean that it would break out the standard deviation that we saw from this line down here, and it would also give context to this standard deviation that we're using up here. So for it to break this and then pull back to either the average or the lower edge would give a better entry, better context for an entry than just jumping on the back of it right now. But yeah, I mean, and in terms of taking profits, like I said, I'm not a massive fan of fade trades, going counter trend, but I would certainly be looking at, I think that's why I had the Fibonacci in there. Profits before this low here. So this is in this downward move, this is a lower high. So, you know, on a 1-to-1, you'd be taking out profits beyond that, but I definitely wouldn't be thinking, you know, beyond a 1-to-1 raw to risk in terms of going along on this, just because it's still overall very bearish. So next, no, this is the same as that other euro one that we were looking at, Euro Swissy, I think it was. So same thing applies. Stop below these levels, and let's just see how there's a better reference for our certainly before this level, possibly before the 23 retrace on the fib. The way the hourly started to flatten out as well. So we've seen support on the daily, clearly. We see that same support on the 4 hourly. It's definitely more prominent on the hourly, and our 15-minute has started to show some signs of bullishness with higher lows and higher highs. So there is the context for a fade in this. Even now, the way that this is finding, so using the 15-minute context here, it was a similar thing to the other one that we saw, but the timing on this is slightly better in that we've got a bit more readability in the lower time frames. So the way it's found support here gives some clue that this could hold true, this standard deviation as it moves upwards. So if you were super aggressive on this, you could just consider stops below these kinds of level here, but not my preferred approach. It's these lows here that we need to look out for, which has a context on the daily as well. So it's really building a trade that makes sense across multiple time frames, so that you've got your stop loss makes sense not just on, you know, the one that you're trading if you're just looking at one time frame on its own, but on multiple time frames you've got that inverted commas protection for your capital. Anything can happen, obviously, but the sensible stop is below these lows, which is all these lows on the multiple time frames here. It means you have to see the price move a lot further, but as I've mentioned in the other videos, you know, if the price does move adversely against you, you've kind of got more outs in order to manage that that risk. So let's say on the 15-minute, if it does break this support and start making lower lows and lower highs, if your stop's below this level, you could still manage the trade in terms of moving your stop loss to break even, because in that move of it moving lower, there's a good probability that it's still going to retrace and before moving, you know, downwards again. So that's just one of the ways that I prefer to manage trades. That's the way you could think about the market for yourself. Euro NZD, no. Come back to Euro USD. GBPAUD, yeah, this is looking good for shorts. Still got this area of resistance that's held true. So I'm looking at this lower high here. I'm deeming this as a lower high. The way it's interacted with our standard deviation channel, the price is still within it. Got soft levels of resistance here, previous support, zonal support, giving us indication that above this area is a good place for our stop, because the price could have some trouble moving much higher than that. There's obviously going to be more contact points on the lower time frames for that resistance we were looking at. So this is the 4 hourly. Again, still nicely within our standard deviation channel. And that same resistance, clearer points of contact. Looking at the hourly. Resistance here, so stops above that type of level makes sense. How to play it? We've already seen on the 5-minute this started to make lower lows and lower highs. If I were to trade this, I'm in positions at the moment, so I'm not looking to open any more currently, but if I were to, the more conservative trade is waiting for a break of these lows here and for the price to pull back. So if the price breaks these lows and in this move starts making lower lows and lower highs, as we're starting to see, then we'll be able to put a standard deviation channel around it to time the entry. So it would be much lower down here, obviously, and looking for reversals off of the average or the upper edge would time a decent entry with our stop loss above the these levels here, or on this time frame here or here. Would, you know, that would be a nice even on a 1-to-1 reward to risk, that would be quite probable. And you know, there's a lot of scope to this to the downside. So even to the average here, you could consider taking money off the table, going in for a bigger move all the way down to this kind of oversold region here on the standard deviation is another way to play that. Just pay attention to what the swaps are though, because on that GBPAUD, the carry on that is probably going to be quite hefty. Yeah, so it's minus, with my broker, minus 4.1. So if you're going for that over a period of days, your swaps, you know, that's, think of it this way, in this move here, in this retrace, it's taken what, 1, 2, 3, 4, 5, 7, 8, 9, 10, about 3 weeks for it to do this retrace here. So it's not, you know, it's not a given, but just assume that in the next move down, it could take as long for that to happen. So 3 weeks of holding this position on a the carries are really going to eat into, or the swaps are really going to carry really going to eat into your profits if you're short on this. So this isn't one that I have a preference to hold for a long period of time, unlike the two that I'm in at the moment, which we'll come to a bit later. So this one, Bearish on this overall. I mean, same again, reference point above this kind of area of resistance, as is the case with most GBP pairs at the moment. Entry isn't as great on this one because of what even our 5 minutes still a bit flat. And I do normally prefer it to be interacting with our upper edge of our standard deviation channel. So tradable in the same way that I discussed in the last one, but just not as good. What's this one? No. Same type of play. Could trade this in the same way with a stop. I mean, what's interesting about this one is this is yesterday's candle is a nice short candle, and really what I'm looking for is the price to move past the low of the candle. So the way it's in this move here, in this kind of extension, it has interacted with our upper standard deviation channel, and there is signs of resistance, and it's a nice short candle as well, allowing for a bigger entry kind of lot size in taking the risk. So say we have an entry as it passes the low, you know, even a 1-to-1 is still around these kinds of areas. So there's a lot of scope in this, but what would void this trade for me, and this is really why there's sometimes no direct answer in how to you know, go in a trade or not. But basically what I would need to see is the low of this candle to be taken out. So in the coming hours, if the high gets taken out and then the low, that would invalidate the trade for me. So if this resistance that we're seeing here in the coming hours price moves past that, it would go past the high of the previous day's candle. That's not the price action I want to see, and in doing that, it would also break out the standard deviation channel as well. What I'd want it to do is break the low without breaking the high. So obviously it could still break the low and then go back and take out the high, in which case you'd be stopped out. But what would invalidate this in terms of just, you know, deciding to take a position would be if it moves past the high first of all, and then deciding on taking an entry as it passes the low. So this is tradable for me, but it would need to take out this support first of all. So take out yesterday's low, which is the same as this support here, and ideally move back. In, you know, we'd see these lower highs and lower lows on a lower time frame using the standard deviation to guide the entry, break and then pull back to either the average, so the middle line in our standard deviation, or the upper edge. So that is how that could be played. Bearish on this, but all the time frames are really saying like retrace or possible reversal at the moment. So this is some nice downward movement, daily lower lows, lower highs, but we've got this retrace like this on the 4-hourly, which is within a standard deviation channel. Our hourly is saying higher lows, higher highs. 15 minutes kind of flat. 5 is starting to move down, but it's this that worries me. This here. Come on. The way the price is still within that. So I would anticipate, you know, maybe if you were to trade this, having a look just later in the European session or into the US session, that may have broken that support and moved past the low that we're seeing on the daily. But not tradable just yet. Pound. Yeah, no. So this possibly would, similar to the other fades that I was talking about, but what I don't like about how this has moved away from that low is how it's starting to encounter what is viably some resistance on these highs here that's also interactive with our standard deviation channels average as well. So that could hold up and the price move, lower, which would mean that this move has a bit more context. But I wouldn't want to short this now, personally, because it's just in a bit of limbo at the moment. Certainly if it starts to break these lows, and that is a significant low on the cable, on the pound dollar, which if you don't know is also called the cables, just a nickname for it. So it breaking these lows here, if it does break these, then it's probably going to be quite a significant break, because this is such a, it's nearing an all-time low. So if it pushes past that low, that's going to be a mighty break. So I mean, you could anticipate that and position yourself for that now, with a stop above these levels here. But personally, I like to see the price show its intentions first of all before jumping on the back of it. So viably, if the price breaches that support there, and in lower time frames we've started to at least see some decent lower lows and lower highs, that would be one way to time the entry. But right now it's just a bit too much limbo. No. No. Yeah, it's finding some crazy support there. Again, this is just looking at fades, but no, leave that alone. USD CAD, bullish, but not right now. It's too expensive. Bearish, but not right now. Bearish. Same that we were looking at on those GBPs. This resistance here is quite significant in that it was previous support, especially on this lower low. So this area here is finding trouble, moving much higher than. No, there's not a decent reversal candle to consider shorting this as of yet. So this is a wait and see really. So not tradable today, but bearish overall on that. And Bitcoin, yeah, this has moved off. As I said from yesterday, I was looking at this area of support here. Price had moved past the previous high here, so got bullishness overall on all the lower time frames except for the 4 hourly, which is still a bit tricky at the moment, but certainly approaching this from a longer term view. Stops above here, stops below here. These highs are definitely areas to approach. Even taking money off the table before this resistance here, this area here could find some trouble getting through through these type of levels. Or for a slightly more aggressive trade or short-term trade, you could use the lower time frames like the hourly here. Super aggressive would be stops under this level. It would make more sense, in my opinion, if you that type of trader, to go for stops underneath these type of levels here. At least it's not as great as the longer term in terms of in fact, let's put that on, see how that plays out on the daily. So entering with a stop underneath here on the hourly with a view to go long on a 1-to-1, 2-to-1, whatever you're going for, would mean that our stop loss based on the daily is at this level. Just going to move this up, which is still, it's not great because it's still within, this could still take out previous day's low and at least find some support around this level here before moving higher. So that would be a case where you're probably right overall on the direction, but you've been just stopped out because of the tighter stop. But it depends how you trade. If you're going for an intraday move, then certainly that is quite viable for 1-to-1 raw to risk or higher. So that's it. So let's just have a look at the positions that I'm in. And these are 3 positions that I now have in the AUDUSD. I've scaled into this again, and this is 3% overall that is at risk on this position. So so let's just bring up the P&L so you can see the running. So all of these are running at a loss on the AUD at the moment, but I'm not too fussed about that because the price is still respected the price action that I determined. This here was the danger area, and I've scaled into this. I've added to the position, and really this is one of the ways that you can get paid, if you like, for your efforts for trades. So I have to be careful when I say this because it's like, I would say starting out, basically go for one position at 1% or less in terms of the capital that you risk, and also only scale in when the position has kind of moved into your favor. Now what I've done here is similar to, well, it's basically averaging down. So I've sold another position and I've added to a position, even though it's in a losing position to start with, if you like. But that's because of what the price action was doing at the time that I entered. It still made sense in terms of what the price was doing. And I know that my overall risk on this is within my threshold. It's 3% that I'm risking. Now, you need to be careful if you're doing this type of thing, because averaging down, which is what I've done here, is kind of adding to a position, but because the price action still makes sense. It's not the same as like martingale system where you're adding kind of bad money after good. Adding bad money after good, in my opinion, would be if the price had disrespected the price action that I was anticipating, so it started to take out this previous lower high that I'm deeming here, started to move up here, and then I'm kind of doubling up the position in the hope that it comes back, and then I make more, back those losses. I'm not looking to make back the losses in that way here. I'm comfortable because of what the price action is doing, and the timing of it allowed for an additional entry to up my risk overall. But I know the raw to risk on this is favorable if it goes in my favor. I've got probability in my favor. Of course, what's probable isn't always what happens, but I've at least stacked the odds in my favor that the payoff on this is going to be decent if it works as I want it to. If it doesn't, I'm not bothered, because it's only 3% of the capital, and with enough of these types of setups, that's easy. The risk is low enough and the opportunity is great enough in terms of other setups that come along to take advantage of it in the future. But that's one of the things that I'm probably going to cover a bit more in other videos as well, is really just getting paid for your efforts. Because if you've deemed, you've done your analysis, you've understood what the opportunity is, you've assessed what your risk is, really those are the times that you want to think about, okay, I understand what's going on here, I understand what I could lose, and I understand what there is to gain. In fact, the one thing that I can understand here is what I have to lose. The upside is actually not that clear, because even though I've got my take profits down here, and these are, I'm looking for this to be moving to quite an oversold area, so it's a longer term type of trade. The potential on it is, if the lower time frames dictate it, it may be a case where I'm in this for a much longer time, because me putting an arbitrary take profit on this, it's like it's me asking, it's me telling the market what I want from it, rather than listening to what the lower time frames are saying, because this could go on for a much further distance. And the way I can manage that is to use the lower time frames and what I'm seeing on the higher time frames to guide that. So the price action I would want to see on the lower time frames is lower lows and lower highs, and I can protect my profits, and we'll come to that in the next trade, which probably illustrates that quite well, by just using the lower lows and lower highs to bring down a protective stop as the price moves lower. But we'll see how this one pans out. Again, I'm still pretty comfortable with how this is, even though, you know, it's been a few days that these positions have been in a loss. It's even moving up now, but it's not, I'm not bothered by that. Even if it gets stopped out, I'm not bothered by that, because I've assessed the market as best I could at the time that I took the trade. And that's really all the best you can do as a trader. Just do your research and have an idea excuse me, of what you're going to do before you push that button to buy or sell. Know what your exit strategy is before pushing the button to buy or sell, because if you're thinking about it when you're in the trade, you've rushed into it, you've pushed, sell, and you don't know how you haven't decided where your stop's going to be, or have an idea of where your take profit's going to be, and you're doing that thinking whilst you're in the trade, you're going to get flustered. And I've been there, because it's a case of you're not going to think as clearly, because you're not going to have as much sleep, because you're just worried about how that position is going to get pan out. So do your thinking before the trade, not while you're in it. So we'll see how that one pans out. Let's have a look at the Euro USD before we wrap up. So Euro USD, I'll go over this quickly. So this is one that I am still in. I'm short on this. Use the daily price action. Let's just get rid of this. Fibonacci. I've had an entry here. I've seen the price action basically create lower lows, lower highs, bought where it was sold where it's reasonably overbought. So anticipating the price would move down. Price action on the 4 hourly is good. Price action on all the time frames is bearish. So I'm happy with that. And what I've done with this, so initially my stop was above these, where was it? Let's put it back just temporarily. So my stop was above these previous highs, which makes sense in the price action, right? Because it's a lower high, it's above that resistance, that problem area. What I've done is drag it down now, so that I've protected my my profit. So this originally went in with the risk of losing £100. And what I've done is the same thing that I was talking about in that AUDUSD, if it goes my way, is to let the price action dictate how I manage the trade, because I've moved this down now and used this price action that I was seeing on the lower time frames, these lower lows and lower highs within a standard deviation channel, and I've now moved my stop loss down to here. So this protects my profit. It means worst case scenario here, unless it for whatever reason jumps over my stop, the most I can gain out of this profit is £34, and I've now extended my take profit based on what that price action was saying as well. So rather than a 1-to-1, it's slightly more. It's about 2-to-1 at the moment. But I may adjust that again if these highs start getting taken out, or I see some signs of early reversal in these lower time frames. Then I may adjust that. But that's a story for another video. When that happens, I'll discuss how I've managed that. But yeah, this is just another way of just letting the price dictate how a trade can be managed. Because if there's nothing to say that this is going to reverse, then there's no real reason to be out of the trade. And it's important to have a reason to be out of the trade, whether it's price action being violated, or you're you know, whatever your rules are in terms of a fixed take profit and stop loss, have a reason to be out rather than just emotionally pressing a button based on some short-term fluctuation in the price that, you know, it's going to eventually correct itself in the context of the price action on one of the time frames. So that's important. Oh, and one last thing I want to touch on this is both of these, you'll see that the swaps are positive as well. I mean, it's minor in terms of what I paid, but these are the type of pairs that I'm happy to carry from one day into the next, because compared to that, I forget which one it was about $4 per lot for the carry, so from one day into the other. That actually can rack up. That can, you know, eat into your profits in terms of, you know, if you're going for 1-for-1s, 2-for-1s, it can really eat away. So these AUD and Euro USD currently, because of the smaller swap, or I'm actually getting paid for the swap, it doesn't have an impact on holding the position. So really, just every currency pair is going to be different. You just need to take into consideration its characteristics and what you know about price action. So I mean, the character of this is quite, you know, these are almost textbook lower highs, lower lows. There was that other one, what was it? GBP Swissy, that wasn't so textbook. Hang on, I'm just going to try and find it. Where are we? Where is it? Where is it? Where is it? Typical. Can't find it. Yeah. So yeah, Swissy JPY. These are still, in my opinion, lower highs and lower lows, but it's not that textbook kind of tick that we see, you know, where it's a deep extension and then pullback. These are very, very rangy, but it's still bearish overall. It's just a different personality that this currency pair has, so it needs to be traded in a different way. So just factor in all these other things, such as swaps, such as the type of price action that you're seeing, you know, the agreement that you're seeing on the lower time frames as well. These all factor into structuring how you trade a position, and it takes it, you know, from being a game of like checkers into a game of chess, because you're thinking, you know, over a lot more variables to make a more you know, informed decision on your trade. Hopefully that's been of help, and if you do like what you're seeing in these videos, or you just want something explained a bit clearer or in more depth, let me know. Just put something in the comments. Subscribe to the channel as well, so you can be updated with these, so when they are released, rather than looking at them in hindsight. And I will see you in the next session, which is tomorrow. So see you then. Bye.